Welcome to the Crypto Law Weekly. Brian Armstrong just dropped a bombshell. 8 of the top 10 institutions holding Bitcoin are all custodying with Coinbase Prime. Satoshi's gotta be rolling over in his grave. Bitcoin was designed to ditch centralized intermediaries, yet here we are with all these giant institutions pummeling Bitcoin into this trusted entity that's already been dealing with extortion attempts, years of SEC scrutiny, and a lot of whispers about paper Bitcoin. This is not decentralization, it's giant systemic risk. As a crypto lawyer, I see red flags everywhere.
The Florida Attorney General is investigating Robinhood Crypto for allegedly misleading customers by claiming it offers the lowest cost crypto trading. The probe centers on Robinhood's payment for order flow model, where third-party market makers pay to execute trades, which inflates costs despite the platform's commission-free marketing. The AG subpoenaed pricing data, marketing materials, org charts, and all 2024 Florida user trade records to assess violations of Florida's Unfair and Deceptive Trade Practices Act. Pricier trades on Robinhood contradict their claims of delivering the most crypto for your money. And this all follows a 2020 SEC fine of $65 million for similar disclosure failures. The investigation could not only impact Robinhood's business model, but impact trading transparency across the industry. Stay tuned for more crypto legal updates from Hodder Law.
Huge win for open source devs. The court vacated its appeal and the Treasury has dropped sanctions against Tornado Cash. So OFAC backed off, Coin Center had a huge win, and Torn surged 14% on the news. This sets a powerful precedent that open source code is not a crime, but the fight is not over. Roman Storm, one of the Tornado Cash developers, faces up to 45 years in prison. The Southern District of New York will be trying him starting on Monday. The charges are for conspiracy for unlicensed money transmission and conspiracy for money laundering. They couldn't get him on the actual charges because of the non-custodial nature of the software, so they went with conspiracy charges. And the third one is sanctions violations, but that's got to be moot considering the sanctions against Tornado Cash have been dropped. Free Roman. As for the price, we're currently sitting at $117,600, just fresh off an all-time high of $118,000 earlier this morning. As for next week, we're calling for $122,500, and here's why. It's Crypto Week in the house. We have the Genius Act, the Clarity Act, and the Anti-CBD Surveillance State Act all up for discussion. And Jerome Powell just said he's considering resigning. Trump gets what he wants, and I think these bills are going to move forward. There's surging institutional interest in Bitcoin. In 2025, we've seen 13.5 billion inflows into the top 10 Bitcoin ETFs. And this week, we're going to see if there's going to be more ETFs approved. Bloomberg just started denominating Bitcoin in millions. So the institutional adoption is here. It's no longer a fringe category. Bitcoin's here to stay, and there's just going to be more and more institutional money piling in. And the Binance Fear and Greed Index is sitting at 67, a sharp jump up from 55 last week, but there's still a little more room to be a little more greedy on that index. We've seen it at 69, 70 before. So what do you think? 122.5, higher or lower? Make sure to let us know in the comments and follow me for more videos like this. Have a great week.
Old time high in this bitch. Watch it pump to the sky. We just buy and get rich. Old time high in this bitch. Watch it pump,